Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. You all know that drill. Hit that like button, subscribe if you already haven't. I hope you all are having a good weekend. And I just decided to do a weekend video today because there was a topic I wanted to get to. And during the week, I try to keep my videos short, and I really don't like talking too much. So I will get into today's video. So anyway, let's get into before I say this, disclaimer, this is not for investment advice, just my thoughts on the markets and the economy. Here's the first thing. This is one reason I think in 2025 or 2026, the market will crash. And commercial real estate crisis is hiding in plain sight. Now, this isn't some right wing nut job site. This isn't some zero hedge or whatnot. This is the Hill. This is the Hill that's talking about this. The Hill, the most normie, corporate, left wing, normal, reasonable in quotes site you're talking about. A commercial real estate hiding in plain sight. Now, it is a opinion contributor, but I don't care if the Hill lets you on, you're just a normie. You're nothing original. Establishments. Don't really care where it came from. Fox, CNN, I don't care. So in May 15th, Federal Reserve Vice Chairman Michael Barr, bank system remains sound and resilient. Well, of course he's going to say that. It's not going to admit there's a crisis till it after it happens. And let's see, this should be absorbed. This is interesting. The banking sector as a whole should be prepared to absorb loan losses that may materialize, providing credit. So yeah, I they're even admitting, there is going to be loan losses. And I'll tell you three of them. There's the commercial real estate, credit card, and auto loans. That's just for sure. There will be mortgage loans too. So anyway, let's keep closer look at the data suggests widely anticipated wave. Commercial loan real estate defaults could spark enough bank failures to overwhelm the FDIC, Federal Deposit Insurance Safety. Commercial real estate loans concentration, banks diminish capital loss system is sequel to the 1980s savings and loan. I don't like reading stuff word for word, so if I skip it, it's just out of boredom. It's not because and then look at this. Banking system, 2.1 trillion regulatory capital to support loan losses. Estimate that banks fixed blah 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 blah. Look at this right here with treasury yield of 3.9%. Today, with 10-year treasury rates over 4.4%, banks mark-to-market losses are probably closer to 1.4 trillion. So it's probably even a lot higher than that. But it went from where is it 1.07 to 1.4 trillion probably. And regardless of the tier one capital loss, many banks are ill prepared to absorb additional losses from commercial real estate. And so this is a chart. Let's see. Let's keep going. Extend and pretend. There's some evidence of extend and pretend. Yeah. Well, the whole stock market's extend and pretend. Let's extend the value and pretend nothing's wrong. And then it's probably going to go, once this crash happens, which should probably be like a 10, 20 year, it's S&P is going to go back to 1,000. And then they'll, complain no one saw this coming. And so here, keep going, nearly identical. So yeah, this is just really higher interest rates impact the ability to refinance. Today's interest rates are much higher. So yeah, commercial property may not justify refinancing at higher rates. So yeah, and that's what's going to happen with eventually credit card debt and bank commercial loan, additional, so here it is. Using regulatory measure, there were 1,763 banks with commercial real estate concentration loans ratios greater than 3, including 20 soar with concentrations greater than 5 and 77 with greater than 6. Most of these are smaller banks, but 2 banks have assets over 50 billion. So yeah, this is gonna be a so yeah, this is my estimates suggest that commercial real estate loan losses as small as 10% could render over 700 banks holding more than 6.5% of all banking systems assets market value insolvent. Larger commercial real estate loans losses of great would inflict greater carnage on the banking systems. So the FDIC can't manage hundreds of simultaneously blank failures. Losses will compound and economic growth will lag as zombie banks continue to operate while FDIC spreads bank resolutions. So here you go. Ending commercial real estate concentrations and unrecognized bank interest rate losses have created systemic risk in the banking system is hiding in plain sight. So there you go. And I predict the market crash 2025 or 2026. When the facts change, I change. But yeah, this is one thing. The commercial real estate loss. This will be. I personally think this will be the trip. I don't think it'll be. I think credit cards and the auto loans come. But the housing market. I did one. Here it is. This is the beginning. As I said, this is a bottom up crash. The most speculative or whatnot. Speculative. The lowest ranking tiers of society fall first, as you saw with Starbucks, McDonald's. But don't worry, the rich and the elites and the wealthy and the people with class, they're going to get theirs. Anyway, home prices are slipping in Florida, Arizona, and Texas. This is what I said. If you have to buy the house, in my opinion, not investment advice, the best place to buy is the Midwest. So that's number one. And then here, let's get rid of that stupid farm fortune, of course. Get rid of it. Now might be the time to move to Florida as inventory levels surge and seller slash prices. Yeah. So anyway, and of course, you gotta have a subscription. I'm not gonna have that. So yeah, I showed you those all right, so yeah, and so it stopped sharing. So yeah, that's the thing. There's a housing market, credit card, commercial real estate, and number four, auto loans. Those are all crashes waiting to come. And there's the treasury market, the bond market, the US government debt, but I think that's gonna implode in the 30s. And a lot of government contractors and whatnot. I think the ones to worry about right now are commercial real estate, credit card, and auto loans. So these are systemic problems. Is more long term. This is not. I'm not going to talk about. But what I think will happen is after these bubbles pop, they're going to go to QE infinity, and gold will do really well. Equities, I don't know. I don't think they'll do that well. I think they're in for a 20-year bear market. And yeah, that's what you're seeing. You're not talking about there's nothing else really I can talk about other than that. So anyway, I hope you like this video and hit that like button, subscribe, and remember disclaimer, I have it in the bottom. It is not financial advice because you don't know. Maybe stocks will do. Maybe I doubt it if those bubbles pop, but they could. No, never say never. Treasury bonds can do really well during crises. So that would be it. And then if the U.S. debt crisis, let's say it happens, foreign bonds would be the best. People might flee instead of going into gold, they could go to foreign bonds. So I'll just say that. That's all. That's all I have to say. You never know what's going to happen. Obviously, you know my position on gold. So hit that like button, subscribe, and I will see you next video.